Hi, Wednesday, July 6th, 2016. Monaco 64 here, home of alternative economics and contrarian views. It's just gone past 8 a.m. London. A lot going on overnight in the foreign exchange markets, in the precious metals markets, in the stock markets. It seems to me that the currency wars or reset is ongoing at the moment, and especially in the British pound, but also I'd like to talk about the Chinese currency. The dollar's been rising quite strongly against the yuan. We reached a high today, let's see, of 671 almost against the yuan. That's the highest level since the beginning of January. And you know what's happened in the beginning of January to world stock markets. Basically, what it means is that China, the world's biggest exporter and second biggest economy, needs to devalue its currency because its economy and credit system is slowing down. I spoke about that in one of my previous videos these last couple of days, how Kyle Bass from Hyman Capital has looked at the Chinese credit system, how the corporate bond market in China is, excuse me, frozen up since April, and how there's a lot more defaults in China. So the Chinese officials, they need to devalue their currency to keep things going and rebalance their system. Looking back, the Chinese since 2005, they actually revalued their currency all the way up until beginning of 2014. They, the yuan, the dollar dropped from above 8 to the yuan to 620 against the yuan. But it's been too difficult for the Chinese to keep that policy, and I think they learned, according to Kyle Bass, some Chinese officials they look at Japan and they said, we don't want to be like Japan when the Americans pushed them around during the 80s in the Plaza Accord, and they revalued actually the yen against the dollar to try to help American exports, and that led to the bubble of the 80s, and then we've had decades of lost growth in Japan. I'm not saying China is going to avoid some kind of credit crunch and probably a correction. Markets need corrections, and China's been growing like a locomotive for the last 20 years. Anyway, getting back to the markets and the currency moves overnight. The last time the yuan was getting devalued as much as it is was towards the end of last year, beginning of this year, and stock markets around the world suffered. So I would say that this doesn't help things. The fact that the yuan is, getting devalued. The other thing that's happening is the pound. About a week ago, when the pound was trading, I think around 134, 135, I made a video, and the question was, is this a bottom or is it a bear flag? I'll put the videos in the tickets above, and you can see that it's actually turned out to be a bear flag, and there's probably a lot more room for the pound on the downside. Yesterday we broke the post-Brexit low of 131.10. This morning we traded all the way down to 127.95 in the British pound. Right now we've rebounded. We're at 129.69. Gold has made a new high for the year at 1371.65. Right now we're at 1367. Silver is trading $20.20. The high was $20.52. So this is also a devaluation for the UK. UK is one of the biggest debtor nations in the world. And I know people are saying this is all because of Brexit, but Brexit is probably just the snowflake that triggered the avalanche. Uh, that's the analogy that Jim Rickards uses for complex systems, because markets, economies, they are complex systems. We can't really have models like the central banks and PhD economists have. When when the shit hits the fan, all these models go out the window. That's why when you listen to Mark Carney yesterday, he was talking about his models and that he's going to give banks more leeway and that things should improve. GDP should do this and this. I'm sorry, it goes out the window, Mark Carney. When an avalanche comes down the mountain, you've got to run for your life kind of scenario. So, yeah, what I'm trying to say here is that Brexit did not cause all the housing bubble, domestic or commercial for that matter, in this country. Brexit did not, make our national debt go through the roof. Brexit did not make consumer spending and consumer debt go through the roof. No, we did that as a nation. So, and Brexit is just the snowflake that's triggered the correction. Longer term, medium to longer term, it's going to be painful, because our currency and our wealth that's denominated in pounds is becoming worth less and less. So that that will mean higher prices. That will mean inflation. Even though we hear people talking about deflation, but deflation of financial assets, but everyday life necessities are going to be hard to come by, and income is going to be lower as well. It will help, though, pay off the debt to foreigners, because the pound is worth less, and when we get income from abroad, it's easier to pay off the debt. So that's what's going on this morning. So gold and silver doing well. The Dow right now is unchanged. It was down 100 points earlier, so it's come back. I expect to continue to see a lot of volatility in the markets. So the main thing seems to be right now, the currency wars are raging, and we're seeing the reset, in my opinion, and they're doing it in the UK. The way for the US to reset, as I said earlier, as being the reserve currency, is for the US dollar to devalue against real goods, and the benchmark of hard assets and real goods are gold and silver. Because if the US tries to revalue against the pound, the yuan, or the euro, it just negates all the devaluation by those other countries. So that's it for now. If you enjoyed this video, please like, share, and subscribe, and I'll try to keep people updated as much as possible in these changing times. Bye.